Thank you for your invitation to attend and contribute to the deliberations of the committee in relation to the imminent exits of Ulster Bank and KBC from the Irish retail banking market. We represent staff who supported customers throughout COVID and went to work each day providing a professional customer service in very challenging circumstances. Staff who show loyalty and dedication to their job on a daily basis, who are now being asked to shoulder the burden of decisions made by others to reduce customer services, cut staff numbers and, in the words of each of the banks, condense their call centre opening times. All done to force customers to move to digital platforms. We see ourselves, and more importantly our members, as key stakeholders in the finance sector. The exit of both banks is the biggest logistical event to occur in the sector since the introduction of the euro. It was clear from the outset that a change this seismic would require the setting of realistic timelines for completion, extra resources and staff to cope with the additional workload, and the collaboration of all stakeholders, all relevant stakeholders, to ensure that there is a transparent and coordinated approach to problem solving. It is a pity that the banks did not adopt this approach from the start. Banks take a very blunt approach to change, and we stressed in all our meetings with them and other stakeholders that appropriate time and resources and transparency must be dedicated to this issue for a successful outcome and to gain the trust of the public. The important issue of staff well-being and welfare has to be central to any decision-making process. All of the main retail banks have reduced headcount over the last 12 to 18 months. They have reduced customer service through branch closures, the removal of ATMs from local communities and reduced opening hours in their call centres. This was all done with the knowledge that these two banks would be exiting the sector. The FSU expressed serious concern on staffing numbers, as all reports and indications for some time have pointed to long waiting times for customers and staff shortages in branches and in call centres. Our concerns were ignored as issues like the removal of the pay cap for senior management was prioritised by the banks and their lobby group, the BPFI. It does not take much understanding of the sector to know that the exit of two main retail banks would overload an already creaking system, that unless properly detailed planning was undertaken and implemented prior to the exiting banks taking the decision to set timelines for customers to move. Ulster Bank were aware when announcing their 6-month deadline that the leaving banks were not ready to deal with the exits, and the leaving banks knew, despite their public utterances, that they were not ready to cope with the additional workload. This was confirmed last week by the receiving banks and by the central bank on a number of occasions, as recently as their roundtable discussions with the CEOs of the main retail banks. We have growing concerns for the health and safety of staff, faced every day now with customers frustrated because they cannot open accounts on demand and dealing on the phone with customers still experiencing long waits and equally frustrated. This is against the background of the Irish Banking Culture Board independent staff surveys showing staff suffering stress in 2 successive surveys. In such circumstances, staff resilience is waning, and hence our serious concern for staff, particularly from a mental health perspective. On foot of our concerns, we employed an independent polling company, Ireland Thinks, to survey our members on staffing levels in their branch or department and how it is affecting customer services and their own well-being. The results are stark and expose the reality. We are launching the survey today, Wednesday, and ask that urgent action is taken to respond to the growing concerns of staff and customers. The survey results indicate 88% of respondents feel stressed at work, either on a regular or a very regular basis. 73% feel that their workload has increased due to the exits of Ulster Bank and KBC. 87% of respondents feel their department or branch is not adequately staffed. This rises to over 90% in both AIB and Bank of Ireland. When asked what arrangements are in place when you are short-staffed, the prominent answer in an open-ended question was none. 87% of respondents feel staffing difficulties had led at some point to bad customer service. And when asked, are staff shortages impacting on your personal life, 80% of respondents replied that staff shortages are either greatly or somewhat impacting on their personal lives. These results should not be tolerated in any sector, but when the state is a shareholder and the sector is regulated by the central bank, these results should act as an urgent call to action for both. We welcome the recent intervention of the central bank as the regulator in calling the bank CEOs in and impressing on them the need to provide additional resources and to work in an inclusive manner with all relevant stakeholders. A number of actions that would give a basis for some hope that working together we can manage the exit of Ulster Bank and KBC in a manner which does not adversely affect staff and customers. The actions would include, but not limited to, a task force to be convened by the regulator to coordinate the agreed implementation plan, a transparent process where stakeholders can see how many accounts have been closed and switched on a weekly basis, a detailed plan on staff recruitment, the setting up of a dedicated desk in each branch to deal with customers looking to switch accounts or to open new accounts due to the exit of both banks. Banks to publish training plans and statistics for new staff and for upskilling existing staff. A reversal of the opening hours curtailment for all bank call centres, and a stop to any plans for banks to move to cashless branches over the next 2 years. A comprehensive communication plan for customers, and a commitment by Ulster Bank and KBC to keep the existing branches open until at least the end of 2023. Despite good work being done by the Culture Board, the recent survey undertaken by Behaviours and Attitudes on behalf of the Department of Finance shows that 58% of respondents feel that culture in the banks had either not changed, disimproved a little, or disimproved a lot since the financial crisis. This clearly shows that an urgent change in thinking, followed by actions, is required across the sector. The FSU launched a policy document at the recent Banking Review Roundtable held in Tullamore. The document is our input into the ongoing discussion on the future of banking. The imminent exits of Ulster Bank and KBC and the arrival of new digital platforms, taken together with hundreds of branch closures, removal of ATMs from local communities and ongoing reduction of staff across the main retail banks, shows a real need for the sector to actively plan for the future. A better and more innovative approach is required that involves all relevant stakeholders. We need to build a stakeholder banking model like what works successfully across a number of European countries. This requires new thinking from the banks and a willingness to change. Better and more inclusive governance, with the inclusion of worker directors and a consumer advocate on the board of each of the retail banks, would put the interests of consumers and staff at the centre of decision making. If this was in place now, a consumer and staff voice would have been articulated and may have helped us to avoid the current issues which we are all experiencing. Chair, we can achieve an orderly exit of Ulster Bank and KBC. FSU is committed to that, but banks must adopt an inclusive and progressive approach, work with stakeholders and show a genuine appreciation of the concerns of staff and customers. Thank you.